Welcome to the Badgercast, where we talk about Bitcoin, yield farming, and the future of decentralized finance. My name is Wasabi Boat Research. Nothing you're about to hear is investment, financial, or spiritual advice, but merely the personal opinions of a rotating cast of internet badgers. Check us out and learn how to put your crypto to work at www.badger.com. Welcome to the Badgercast. It is me, Wasabi Boat Research, talking today with two developers at Badger, Jintao and Alex, the entrepreneur. What's going on, guys?
Thank you for having us.
Today we are talking about some major upgrades that happened to the APY displays that you will see in app.badger.com, and also some more advanced analytics that we are rolling out. I believe, is today the first time that we are kind of mentioning this publicly? Like, there have been some links thrown around in the Discord, but can we call this the official launch of Badger Ninja?
It's not officially launched. We're looking at release candidates and things like that today. So there's still like minor touch-ups going before things come out. But yeah, it's live on our beta site that the people in the Discord are aware of, and yeah, it's coming along, almost there, I'd say.
All right, so we'll call this the stealth launch of Badger Ninja. But I wanted to kind of like bring us into that discussion with connecting this to kind of like the core of what Badger does in DeFi. So we are a yield aggregator platform or yield farming platform, and we exist so people can deposit their crypto into Badger contracts, and it executes an automated strategy that will give them yield on it. And the most important thing when users are looking, there's an APY number that is displayed on the app, and there is, it seems like it boils down to one number, but there's a ton of detail that goes into how it's calculated, what it's composed of, and how, or is it a backward looking or forward looking. So we're going to get into all that today, and hopefully you will come away with this with some tips or a deeper understanding of how these numbers are generated, and what to look for when you're evaluating kind of yield farming opportunities. So I don't know, Jintao, do you want to just like set us up with like talk about the problem of displaying this APY in yield farming? Like, why is it so tricky? What are all the different ingredients that go into it?
Yeah, totally. So, in any market, and especially crypto, like you have asset volatility, right? So, when you're trying to price APR and like something that's not in dollars, or, something like that, or like where you are not denominating necessarily, in the same currency, where in some farms, you basically receive, some currency in another, like for deposit of a different currency, right? And so basically you have fluctuation there. And so like, I guess to really illustrate this, I'll just like walk through an example, right? Let's say we have a new farm, and that farm is like having really high APR on on let's say USDC, because that's a bit easier to understand. And so like, okay, this farm is having like 500% APR. That's crazy. And that's because the farm just launched. So right now it has like 10 grand in it, 500% APR, and the coin got like the coin that's being paid out, its pool 2 was seeded at a very high price. So let's break that down. You have a high priced emission token, you have a low amount of capital farming for that token, which is being like valued very highly. So if capital starts coming into this farm, even like dollars, right? Let's say even 10 grand more comes in, that APR just dropped to 250%, because now it's being split, right, between multiple parties. Now, if you start adding in the fluctuation of the token, like what are those people doing with that 250%? They're going to start dumping that. Okay. And so now that token is worth less. So the APR they're receiving is also less. And people are still seeing this high APR. They're coming in, they're dumping. Coin price is going down. APR dramatically shifts down, and then you have this other, aspect of things where sometimes like the APR you experience on a farm can be impacted actually by other farms. So like in this case specifically, a lot of these setups have like a pool 2 farm, right? And that APR is just insane. And so like what you get usually is you get this really quickly amassing liquidity for the token, where sometimes you actually get a reversal in this dump effect from the beginning, and APRs once again, tick back up much higher than they were. and it kind of oscillates till it either finds some equilibrium or dies off because nobody wants the token. But that pretty much illustrates the problem and how a lot of these new farms, or even just any farm that just launched within the past X days, like its APR can be quite volatile at the start.
Yeah, I have to agree with Jintao's assessment. I'd like to also clarify that most strategies or most vaults are denominated in one token. And so this level of complexity can increase dramatically because the number you're seeing ideally is not referring to the dollar value, because the dollar value may be an additional level of abstraction, but it typically will be referring to the underlying token. And so there is this additional layer of complexity that can cause confusion, or it can be used for deception by less transparent methods.
Got it. So if I was going to kind of like turn that into a list of bullet points, it seemed like the things that make this tricky is like number one, your yields are going to go up and down based on dilution. So if more money enters the pool, your yield will almost certainly go down because there's a certain amount of reward tokens that are going in, and then more dollars or more of the deposit crypto is competing for that fixed pool. Then on top of that, the rewards that you're getting are denominated in usually a different token, and that price is going to fluctuate. And then there's going to be that can be amplified if it's a pool two situation where your people are getting that token as a reward and then dumping it, or there could be a sudden surge of demand for it because of that APY. So it's kind of like, I don't know, if you move to one end of the seesaw or the other end of the seesaw, it's going to go dramatically one way or the other. And then finally, especially with Badger vaults, in many cases, you're getting like a mix of tokens, right? So it's not just one price you have to be aware of. It's a mix of, one, two, or even three or more prices for the token. So like, this is why this is such a thorny problem, right? There's so many different elements that go into that one number.
Yes, yeah. It's that was just, one particular situation. But yeah, things can get pretty complicated pretty quickly to assess kind of like where that change is coming from, just because of how many externalities or just like confounding factors there are in there that, kind of can work to obscure like what is happening, or like why something may be happening.
Yeah, and I think we jumped kind of to the presentation side, which is kind of the end product of the technology that we built. But the other side is to like to make the problem simpler, or to show how it's made of multiple sub problems. The base level of what every investment strategy will do is you will take the underlying token, which we call want, and it will deposit it into, let's say, a gauge, or like a pool. So, and we're gonna call it the balance of pool. So it's gonna send it somewhere to earn that yield, and then we are going to have a balance of rewards, which is basically the amount of tokens that we are entitled to claim because of the deposit that we made. The balance of rewards could be because of a lending interest, or it could be because of liquidity mining, etc. We have another podcast about how sources of yield are found and what they consist of. But ultimately, the first piece of writing a strategy is that uh, we have to figure out whether we're able to convert whatever we got, which are these rewards, into more want, and whether we can do that efficiently. And so that's going to be the most contentious point and the most delicate point, because any change at that level will then have ramifications into how we display the APY. And then the choice of displaying the APY is an additional problem on top of that, because as we'll discuss in this conversation, there are multiple ways and multiple assumptions you can have to display that data.
So maybe this is an additional factor that you're getting into. It's like, say in a vault, I'm depositing my Bitcoin and I'm getting some random token. Then if the vault is selling that random token into more Bitcoin, then that's also going to create an impact on the price of the random token. So there's like a slippage that also could get impacted, that could also impact the APY. Is that right?
Yeah, you could have price impact, but you could also just have a lack of liquidity because the pool may be illiquid, or the pair is extremely volatile, or it's highly inefficient. And so this kind of opens up what we call internally a Badger the pricing problem of how would you be confident that the price of a pair is good? And the answer is we're going to spend the next years figuring that out as an industry. But in short summary, um, the core mechanical challenge of swapping whatever reward into more want is the, let's call it, the day-to-day operation that we have to perform for our strategies. And then on top of that, we're going to have the challenge of displaying this data. And so the solution that we're offering, or the path that we took, of which what we're talking about Ninja and the just the way we show APYs now is a consequence of, uh, also had to address that extra problem of making sure that we're not getting wrecked on our swaps. And so that's what I like to emphasize, is that in solving APY or showing it, we're also addressing an underlying monitoring of how the strategy is doing, which anyone can verify because it's fully on chain, and we'll get that.
Got it. So next question is just for both of you. When you are doing yield farming or looking at new opportunities, what do you look at? I'm curious. Like, are there do you kind of put a lot of stock into this headline number, or do you look at more a view on the reward tokens that you're getting, or do you try to like forecast what the APY is going to be like with these pool two dynamics, or what are kind of like the main features that you look for in assessing these farming opportunities?
Yeah, I can start. For me personally, like you know, I really don't put much stock into any of the APYs I see, just to be honest. Like I'll pretty much just go check it out and and check it myself, like as I'm farming, like what I'm getting. Like most of the time, like it fluctuates too much for it to even be real. And so and this is kind of back in the heyday, right? Like in November, like times like that where tokens were flowing, not so much today, but um, you know, that is mostly what I'm doing, and kind of basically operating on chains where it's like the opportunity cost of changing a farm is much lower. Like Arbitrum, things like that, more than Ethereum recently. Like for Ethereum, like I'm gonna probably not have such a high risk tolerance to go do crazy stuff and move my my money around in an expensive environment. But where it makes sense, yeah, to move around. But yeah, generally I would say like if I just feel like I'm being paid enough, like I'm happy. And in some cases where the APY is fluctuating a lot, or it's like not quite like what it says. A lot of times it's just because oh, for like 1 second the price like rocketed up and now the APY like looks so high, but as Alex mentioned, like the pool is like illiquid, right? And so the price is just ping ponging up and down like crazy. And so yeah, I mean, it's kind of a personal thing, right? And so like as long as you're happy. And yeah, this kind of issue is something that I don't worry too much about.
I don't want to sidetrack us too much, but I'd love to hear some of your thoughts about aping in versus being patient, because from my experience, um, not only is the APY most of the time irrelevant, but it's also like it's just gonna get how do I put it? It's just gonna get arbed out within a few hours. A few
Yeah.
launches I remember are like the Geist launch. I remember Geist basically
Yeah, guy.
printing tokens out of the air. And I just remember, being like, yeah, this is really juicy, but it's going to last for like 4 hours. So, like, if I run my own math, it's not even going to cover the cost of bridging or whatever. Given the additional risk and all the other work, because as you're aware, I'm the type of guy that will read the contracts before putting money, because I'm not gonna randomly trust a thing that can take all my money in one click. So I just wouldn't, to be quite honest. I feel like most of the APYs that are really interesting or that are worth exploring are in these more stable projects where stable just means that after the spike in APY, it doesn't just go into a death spiral. And so that's something that I don't necessarily think you can verify through their math or their tokenomics. Is a combination of what happens to people buying in, people deciding to lock the token, or people deciding to interact with the protocol. And then after a week, once the dust is settled, that's when you'll actually find something that is worth looking into. And to give the most rational example, just look at Compound and how for 2 years you had basically completely doable levered strategies and completely feasible base deposit strategies that would yield far above market rate, and they will be absolutely viable. So from my experience, the APY just gets arbed away, and it's just a flashy mechanic. But I'd love to hear your thoughts, your 2 cents on that. If you've ever seen something crazy that actually panned out.
Yeah, so I think for me the biggest thing is actually is exactly what you mentioned, right? Like being able to quickly parse the contract and identify it as like a fork, and then further than that, like know the risks with particular contracts and like how to spot the rug, right? And then further than that, basically like knowing like where you are on the time scale of the launch, right? So like if you go and it's like 200% APR and it's like a master chef fork and there's like 50 100 million TVL, like you're probably a bit late. You know what I mean? But like if you see the same setup and there's like 1 million TVL and 6,000 APY, like yeah, I think the risk reward is a lot better there, right? And then you kind of need to size appropriately. And if you've done the DD and you see that it's safe, and I love that you brought up Geist, because that farming Geist was really fun. I personally got in. I was I think I got in like less than 20 minutes after they launched their website, and yeah, the yields were absolutely ridiculous. And so like yeah, that, I mean, it's kind of a good example there, right? About like maybe BDP, big data protocol, is another one, right? Absolutely totally crazy farm, 7 billion in TVL like after 3 days or 2 days or something, and it was just a master chef fork. So yeah, I think there is some alpha to be able to just like recognize patterns, recognize forked contracts, and know like, okay, sushi's master chef, like that original one, like, oh, people are worried about the migrate function because it's essentially a rug, right? So you basically say, okay, this looks like master chef, there's no migrate, these functions check out, I can do a diff check, looks good. And you can kind of find some safety there.
Amazing. So basically, we already have the teaser for the next episode where Jintao is gonna tell us all about his degen strats to find contracts within 20 minutes. So stay tuned. Stay tuned for the Badger podcast.
Okay, so you talked about Master Chef. They're these standard contracts that you see, but I'm curious about just the APY displays, since that's the focus here today. Like, is there a industry standard way of calculating and displaying those APYs, or is it kind of all over the place? Are there any good examples, or is there anyone in DeFi that like does a really amazing job that we're trying to model ourselves after, or is it all kind of like a similar code that people are using?
I can't say that I've sat and read through a lot of the more recent APR stuff. Maybe I should, because most of the stuff that I took inspiration from was basically, so we started all this really early on, and so pretty much the only people who are in the game of like estimating vault performances was Yearn. And so all of the original stuff that we did was based off of Yearn. And essentially, like at that time, everything was just like a auto compounding vault. There's like this price per full share, it moves up in a stepwise manner, like per harvest, and from there you can take 2 points, draw a slope, and that's essentially like the rate of growth, right? And so that was like the really really like old first um like way that these things were being measured. And it's, I mean it's not great, and it's definitely not good for knowing like what's happening right now, because you only have backward looking data. And so you kind of have that approach which we had at the beginning. You have a lot of the, what I would say is probably the most common approach, which is just like measuring like what is happening right this moment. And so like some of these, will be like, quite volatile because, as I mentioned, due to price fluctuations. Like there's no dampening or anything like that to say like, okay, like here's like the average, like the moving average over the past hour or whatever, right? um and then you have at the other end of the spectrum, where you have somebody who is doing that but also applying like, some kind of arbitrary idea of like what the vault is going to be doing. Like, so they take it even a step further, right? So that, like, you have some of these, on Binance, for example, you have like, these projects where it's like this vault is harvesting like every minute. It's earning like 300% APR, so it's going to get you like 5,000%. And that's just like, it's just no way. Like, it's not. I mean, maybe, but probably not. So that's kind of where we're at. And then even now, like, you have, like, maybe if you look at Convex, you look at Balancer, like, you have these systems that are set up to essentially like distribute rewards, like, essentially almost like a streaming fashion, like over X amount of time. And so it's like, there's a delay in reward start. Like, they start off slow and they ramp up. And like that's kind of all like a recipe for like showing these projections or these ideas of what may happen, when in reality, like, there's just no basis in those conjectures. Because like, what if like, let's think about it two ways, right? You have a farm, it's making 20% APY, and the projection is, because the rewards are ramping up, that they're going to ramp up to twice that what they are right now. And you're going to have like this 40% APR now. Like, think about that for a second, because like, if the rewards are going to 40% and people are happy with them at 20, it's just going to attract more people. The rewards are going to find their way back to 20, or maybe even lower, or maybe people leave because there's a rug and now rewards are 800%. You know what I mean? So it's just like, like with all the models that are out there, there's problems, there's trade-offs. And so that's also another reason why I don't put like too much stock into the APY, because like these things do change a lot. And I think it's, people don't think they do, but they can. And anyway, yeah. So to get to the point, like, to highlight like what we're doing now, and what I think ultimately is kind of like the best attempt to show like what's actually going on, is just straight up simulating a harvest um on our vault, and like knowing like how long has that vault been holding those tokens in that harvest. And then you get a really simple calculation, right? Because you have an isolated period of time. You know exactly like what tokens you have and how much they're worth. And you can see like you can kind of preview like what the conditions will be when you harvest them, and kind of know exactly what rate of yield you're getting.
I think that was brilliant. Can I add? I'd like to add some context back to how the technology was starting and etc. But like, you want to go back to those funky looking sushi like websites, which I don't think Sushi invented the design of. Maybe somebody else did. It was like a
I think it was
there
Yam.
was, Material UI.
Yeah.
We have Material UI and Bootstrap, which most people can recognize. And then there's like the this whatever template that people in DeFi use for the MasterChef forks, the Yam forks, etc. And but basically, there was no ethers. There was not even an updated package. And like, imagine you're like a solo developer, because most of these projects, that's what they were. Even Goose Finance is probably a 2-3 people effort. So the way they solved for APR is exactly as Jintao said. They just looked at what they kind of expected the results to be. They just put like a hard coded value inside of the UI, inside of the JavaScript, and then they kind of move the balance or that value based on how many deposits are there, because the deposits you can always query by asking the vault its balance, but the APR, it's not something that you can easily query on chain unless you build for it, which is what we did. But unless you really took the extra time to add analytics inside of your technology, which at the time of Yearn v1 back in DeFi summer, there was none of that. You just couldn't know. So the reality is, to make a long story short, is most people just ballpark it. And I think for most projects, even now, the idea is that they will just ballpark a estimated emissions, and then they just given the estimated emission, they just make the math work so that it rounds up to work. So basically, instead of getting the real math, which is what we're gonna show how we do, we get the real math. We can't lie. You can just check it on the chain, build your own UI. You're gonna get the same math that we get because it's all on chain. But most projects will just find a target. It could be from a graph, some graph data, or from an event, and then they'll just retroactively build a estimation around that. And so most of the times the APY will completely be like, if you actually harvest every day, you're gonna see completely different results from the values that are being advertised on most websites.
So, from that, it seems to me that like the main difference then is backward looking versus forward looking. So Jintao, you said, like the older versions would kind of like take the last data point and then the second to last data point and compare them, and then you've got a line that you can calculate the slope. So that's backward looking. And then the problem with that is that, especially with like convex and curve and balancer, there's these governance decisions that are changing the rewards every so often. And so that's like what introduced this kind of forward looking estimate where they know that, okay, next week these rewards are going to turn on. So then they move to being forward looking. And you said that our new system is leaning in that direction, in that it kind of takes what a harvest will be and simulates it and estimates what that forward yield is going to be. So it's not no longer backward looking. So I'm wondering if you could just like break that down even further, like starting with explaining like what a harvest is and how do we get those forward looking data that are going into that simulation.
Yeah, cool. So like to just like clarify things a bit, the system I mentioned was how things were done like in December of 2021. No, 2020, 2020. I don't know, 2020. Yeah, uh,
Probably
yeah,
2020 for
yeah,
the
2020.
first stuff.
But anyway, um like things have evolved since then, and so the system that we're currently using, which is like, trying to essentially derive like what is our historic performance, basically takes a couple things into account. So our system basically puts out these events that say, okay, I harvested this many tokens. And so what is a harvest? A harvest is just like, you deposit your tokens into the farm. Um, you have some pending tokens, and like they may or may not be the token that you want. And so like in the case that they are the token, you simply just put them back into the farm. You've harvested your crops and like, replanted them. In the case they are not the token you want, you do some swaps, and basically swap them into the token you want. Maybe you perform some other actions if it's like a pool or something, like, there's some need to deposit the token into the pool and then deposit it back into the farm. But yeah, that's the harvest. But what we've started doing instead is, these vaults are letting us know, like, okay, I harvested these tokens, I sent these tokens for users to claim to the Badger tree, and we have on-chain record of that. So we can look at those events, and over the period of time that they're occurring, and this is what we're currently doing, over a sliding window of like the past 2, maybe 3 weeks, and we can say, okay, like at the time that this harvest was done, we can see that the strategy had this many assets, and you can do that for every single one of those events. And what you can basically do is you can build up this like time weighted average yield, if you will, where there's like every harvest, you had some amount of assets and they earned some yield, and so then you basically can kind of weight that based on how long that period lasted, and get an average historic yield that is probably a bit more accurate than, or not probably, definitely a bit more accurate than like these just like linear draw point to point, right? And really quickly, just to highlight like why is this important, and it goes back to everything that we've been talking about, is that you can have a strategy that's earning 500% APR for 10 minutes with like $1,000, in it harvest, and then boom, okay, it says it's like 5,000% APR. But now you get 10,000 more dollars, and that weight of that $10,000 over time is just going to be much more than the one than the the $1,000 at 500%, and then, oh, all of a sudden it's earning like 40%. And so the APR is going to come down hard because that period of time is just going to be weighted more heavily than that short period with less money. And so that's kind of where we're just getting like this way of like like kind of maybe not dampening, but like trying to make these yield estimates a bit more realistic. um Yeah, and so I don't know if I yeah, so the question is about the what we're doing now. We basically are simulating these harvests that I mentioned, and so like what is that simulation? It's like okay, these new vaults they know the last time they harvested, and so because you know the last time and you're able to check the vault and say, oh, if I harvested this now, I'll get these tokens. It's been this long. I know I'm farming with this much capital, um, and so I'm earning that percent APR. Um, so to like address like a I guess like a point is that this still has the issue of varying capital that is in the strategy. So like let's say that in between do you harvest the strategy grows at um you know grows 2 times, right? What you'll notice is that by the by the virtue of this measurement, there will be a short period of time where the estimated APR will go down, and that's because that that metric is just like there is some period where those assets are going to like just impact that harvest check because it's not like a continuously running thing. Like we basically are checking these things like every 5 minutes and updating these values because we just need to do it like that way so we don't basically blow all our money. So like there'll maybe be like a 5 minute period where that the um it could look like less, right? But that will very quickly catch back up. Those assets are earning at the same rate, and so within 5 minutes you'll basically see that um, yeah, that yield estimate will have recovered or possibly never even been shown. But yeah, that's kind of where we're at in trying to show like really accurate yields and exactly what's going on versus like having to check against the chain yourself or whatever. We kind of take some of those steps out of there for you, and surface all that data so that you can um, see what's like really going on. And you could even compare what you're seeing in the vault compared to like your own test deposit, if you will, or something like that.
And is there anywhere that it's getting pricing data, or how does it know what the different relative values of the tokens are at any time? Is there an oracle, or what is it looking at to get that info?
Yeah, so this is the famous pricing problem. Yeah. So at the moment it's coming from a variety of sources. Some tokens which prices are already available, those will just be estimated off of CoinGecko. For some that are like more niche, we have like custom pricing functions where we've like found pools where these things trade, and based on the kind of pool we're like able to derive like the value based on like some known token prices. There's some more in-depth implementations, especially around stable swaps, which are really not as easy to do with things like Orabal and that's kind of the main one. But like and maybe this stable pool ones they have, but basically implementing some of those stable swap derivations to be able to price these tokens that are like not on CoinGecko like appropriately and make sure that we're showing accurate values for those. So yeah, I mean, I would just say they come from a bunch of places, and generally they're going to come from CoinGecko or from on chain, like just estimating like from pools. Yeah.
So you're saying CoinGecko is a new chain link?
No, we will implement Chainlink, but I think like really the CoinGecko stuff comes from again like really early on, just like utility that we had from like December 2020, and like ultimately the goal, and I'm sure Alex would like to talk about this, but ultimately the goal would be to be able to get like on-chain pricers and really source that information like from ourselves and like the pricing that our system is seeing on chain versus like yeah just arbitrarily using CoinGecko or something. Because if we do that, you're able to like get a real view of like what the on chain conditions are, right? It's not like some view of like centralized exchange liquidity or something like that, where this is like okay, this is like what you're actually getting on chain, which price may not necessarily correlate exactly with what people are seeing it on the centralized exchange. And a really good example of that is like
Yeah.
UST, right? Like huge deviations in those prices, like when the crash was happening.
Yeah, what I would recommend though is in introducing this new tool we call Ninja. We've been using internally for a while, but also in just recommend that you also build your own tools, because the smart contracts are on chain. You can just build your own tool to integrate it to figure this math out. And There's another tool that I built to just I think it's called pending rewards estimator, like a really technical tool only for the people that are super super careful about getting the exact math. But the technology that we built enables to ultimately do two things. One thing will be to compare the return based on the underlying value, based on the underlying token. So it will be a want-to-want comparison, and that will enable you to do the math without any pricing because it ultimately is denominated in the same thing. So you could just do new value divided by old value times 100. That's your rate of change in percentage. However, when it comes to estimating the return of tokens that are basically just not sold, that does impose a set of challenges. And the simplest way in which you could do it, or the simplest way in which you could do it but for doing your own research. So that's not how we do it on the UI. On the UI, we just convert everything to dollar to make it easy for you to understand, or we denominate in the underlying so that again it's easy to do the math. But the thing you could do is you can just look at what we call the balance of rewards, and then at the harvest return value, which is this idea that Jintao talked about of simulating the harvest. And you can just look at the different tokens that are emitted between those two operations, or basically the tokens that are returned. And one of the tokens is going to be the want, for which you already know what to do. We just spoke about. But for everything else, you could just compare them line by line and see what was farmed, which is the balance of reward, what is on the left, and what is actually returned, which is the value of the harvest. And you can just compare those. And if you see that the same token goes in and the same amount of token goes out, that you know that in processing it, there was no leak of value. And so while the pricing problem is something that we're going to deal forever, because ultimately somebody has to tell you what the price is in relation to the other asset. And so it's something that we can offer you choices for, but ultimately there is a set of assumption or set of trust that has to be done there. You can still verify simply the inputs and the outputs and figure out what happened and what's the story there. And that can be done fully on chain because of the technologies that we are offering and that we're using at Badger.
Got it. So I know you want to get to Ninja, but there's also this new math is reflected in the main app, app.badger.com, which I'm sure most of our users will be using and familiar with. So, what do you want to talk us through? I don't know, pick a vault that you like on app.badger.com and kind of like walk us through the new breakdown that someone will see when they click on the APY and any kind of like color commentary about these new values and how people should be interpreting them.
Yeah, so yeah, it's coming out soon. I think as far as like what people should be interpreting, hmm, like so what's going to come, and people on the beta app have seen this, is essentially there is a historic APR that's going to be displayed, and then there's going to be a current APR that's going to be displayed. And honestly, how you interpret it, and I know this doesn't answer the question, it kind of dances around it, but it's completely up to you. You know, if you're looking for high yields right now and the vault is telling you that it is earning 300% and it's a new vault and it's like the historic is 200, it's currently earning 300, like yeah, that maybe that's the vault for you. um on the other hand, like if you are seeing, like let's think about it in the same mindset, right? On the other hand, if you're seeing a vault that it's historic APR is like 36-40%, like maybe I haven't looked at CVX CRV in a while, but think it was around there. And then but CRV is now pumped fuck, it's like gone like 200% or whatever, right? And so now it's like, oh yeah, this is like 80% APR. Like, are you going to expect 80% APR? I don't know, maybe. Um, you know, so that's kind of where your thought process needs to be. It's ultimately up to like the person to decide like what they're thinking. But it's mostly just there to be an indicator for you to see that things are performing as expected. If the APR that is happening on Convex right now is 80 or 90%, or I haven't checked, so it's whatever. And you know and that's what the vault's doing, then it's mostly there just to give you reassurance that this thing is operating appropriately and that it's not like getting wrecked, it's not performing poorly, and most importantly, it's giving you a really accurate representation of what's actually going on. Um, so that's how I would use that information, and then just kind of take it with a grain of salt with respect to like the historic APR, and then kind of I guess form your opinion from there about whether or not it's right for you.
Yeah, I think you're saying that this historic APR is also you can see it now on Badger Ninja, which we'll talk about, but in the future it will get rolled out to the main app, so that will be like integrated in the display for every vault. Yeah.
Yeah, that is the eventual plan.
Cool. Yeah, I think that's going to be really, really helpful because I know we've had some things where there's like a hiccup or a bug and kind of like one harvest doesn't go correctly, but then, it catches back up on the next one. So you'd kind of be able to see, okay, there was just this like temporary hiccup that caused the yield to deviate and it's kind of going back to where it should
Yeah,
be.
and yeah. So yes, that is true. But the other part that Alex touched on that we're not like kind of bringing in right now, which I really want to highlight because you just said that, is that this is now also a monitoring system. Yeah, and so like these hiccups, they should become less and less frequent, and they should just not be happening. Right? We have a monitoring system in place. It alerts the team when there's issues, and so if we're seeing those issues, like those bad harvests, they're not going to happen. Like we will be ensuring, and like we now have a system in place to make sure that that kind of stuff doesn't repeat.
Yeah, that's the other side of the discussion is that you track what you measure. I think it's the old quote. But basically, we in order to address the APY issue, we did that by also addressing a need that we internally have for monitoring the health of the harvest and the health of the strategy itself. So that means that what the spot harvest APR is, or basically the current projected one, the short term APR is showing you, is not only showing you whether the exact output, because again it's not an imagination or whatever, it's literally what we ask the on chain. We apply the pricing, which again one day will open source the pricing mechanism so that you can price your own way your own assets, or you provide the prices. But ultimately we just apply that transformation and we just send you that back. And then if you go and check on chain, you can even get the direct value in these underlying tokens, so you can do your own dollar conversion or whatever conversion that you want. But in doing that, we also built again a tool that will enable us to compare the value of what was being farmed, basically the true value of the emission. So if you think of a vested escrow protocol, could be curve balancer, convex, etc. You We literally will show you exactly how many of those rewards were received by the strategy. So you just divide the amount of tokens in the gauge by the amount received and you get your spot. And then we're also going to show you what the slippage is going to be in processing them, because a strategy could just sell for the underlying, it could sell for something else, it could never sell and just emit it, it could convert it to a strategy, another vault, etc. But no matter what, we'll show you the exact value that is returned, and that is in it of itself is a monitor of the health of the harvest. And so seeing that and having an immediate, which basically having an immediate status page for strategies, means that we effectively went from needing a secondary system that tracks the status of our vaults to just asking the status of the vault directly on chain. And because of the fact that we're querying on chain data off chain, because we're observing it, we're not interacting with it, now we have a way to know whether that value is correct, and we have a way to immediately investigate that. So um, I think historically there have been accidents where it maybe could have taken us even a day to figure harvest issues out, or times where we had discussion about whether the harvest was even an issue. I think literally yesterday we had a warning, and within 20 minutes we already knew what was going on, and we could immediately measure it. And that's something that you can do. That's something that we can do for our day-to-day operation to understand what's going on, and that's something that you can do to also make sure that the strategy is working properly. And so you can get this additional information directly on chain, and at the same time, you can use that to extrapolate a ELF factor or ELF status off of the vault.
Awesome. Okay, let's go to Badger Ninja. Jintao, do you want to give us the URL for the staging site now, and kind of like give us a quick walkthrough of what people can do with it?
Yeah. So I mean, um, the beta site is beta.badger.com, and so right now Badger Ninja is hosted on Vercel. It's very much not production ready, so that's what I mentioned at the beginning of this, but it's coming soon. But if you go and look at like any of these, and also I think it might be busted right now since we're doing some chart migrations before it comes out. But if I go to beta.badger.com and I go to any of the vault pages, what you'll notice is that there's a Ninja Analytics link now underneath all of them, and so when you click that, it'll take you directly to Ninja. And so, yeah, one of the ones that I'm looking at here is, like the Graviora Vault. And like you can kind of click on that, it'll pull it up. And then you can kind of, yeah, you can just like scroll through it and see, all this stuff that I'm talking about. And so like, yeah, we're still going through this, very much still in beta. Working through some issues and bugs. Like I was, even just pushing some code last night. But yeah, if you go to beta, you can check it out. You can see all the stuff that we've been talking about. You can, we've made some updates on like how our things are displayed. So, addressing issues with respect to, the historic APRs with like the new vaults coming out. So like we kind of shy away from showing historic APRs while these things are ramping up, but we will show you like, kind of what is the current vault performing at. And also just, focused on kind of simplifying the language around like what's happening to something that's a bit more understandable. So yeah, that's all at again beta.badger.com. You can go check it out. Um, yeah, and find the Ninja Analytics site links there as well. That's hosted at I can say it's hosted at badger-ninja.vercel.app, but that's not the ultimate place it'll live. So no guarantees that anybody listening to this later will still exist.
So is the ultimate plan just to have these analytics just directly in app.badger.com, and that there will be no need for this like more in-depth analytics site that's elsewhere, or is there always going to be this like deeper dive place if people really want to go deep on the analytics?
It's hard to say. I think some of the stuff like will get moved over. Not obviously not everything. Like I think that a lot of the stuff about like, there's things like vault user history, like you can see people's deposits and transfers and all that stuff. Like not sure it's, really necessary in the app. So I think there'll always be a separate analytics site. Um, but yeah, there's definitely going to be some features of this like that have gone into building this that will creep into the app, specifically like, the vault history, the vault charts. Like one of the things that we've really focused on actually is like really trying to, and that was kind of the migration I'm talking about, is really trying to capture like what is going on with these vaults, and like, capture all the different metrics, like the yields, etc., right? um and so trying to enable those metrics to be infinitely captured across like, the entire lifetime of the vault. And so that will be really nice because, a lot of people know that currently the vault is only, able to show you like, the yield from like the past month or whatever at max. That's purely due to like operational costs, but we've revamped our system about how we index these things. And so now it's, we're expecting like, a cheaper, faster system that also is able to deliver just like much more rich data, yeah, for the app. And so that should be hopefully rolling out, sometime in August.
So I'm checking out one of these pages right now, and I hadn't seen this one before. I was looking at the Ninja site, but I really like how the Badger boost is shown here. So it will go, like that's such a huge component of how many users realize their APYs, right? So, and that's different on a user by user basis. So I like that someone will be able to just kind of instantly see where their boost is at and how to calculate it to get to the next level. But then a question on that, like for these historical numbers, is it getting like personalized to each wallet based on their boost, or is that kind of like that, or is that just showing like the overall underlying vault performance, and then an individual user's boost is going to go up and down based on their what's how much Badger is instantaneously in their wallet or the other assets that qualify.
Yeah, so this yeah, I guess it's kind of an opinionated thing. Yeah, it's so really we're just trying to give an idea of what's going on, and so most of the data that's going to be shown is going to be unopinionated and not because it's an analytics site, right? It's not really meant to be like this personal thing. So most of the stuff is going to be showing like pro rata Badger distributions, so essentially like what is the rate that we are giving out rewards, not necessarily what is the rate you're receiving them. And yeah, so but we will always show the range. It's just that when we take into account these things, like um, most of the Badger is going to be just yeah, it's going to be shown at like what the pro rata rate is, not necessarily what one individual user is getting.
Got it. Okay, so eventually this will mostly be integrated and will just kind of like be part of the new flow. So I don't know, as we close out, like what's next? Like I know Alex, you've teased like the pricing problem is like really deep, you know, like you can't it's really this like fundamental problem throughout DeFi. What are the best liquidity pools to look at? What are the best exchanges to look at? But what are the kind of like the most interesting problems that we're going to be working on as these vaults get more complex, more and more different yield types and actions that the vaults are going to be doing? Like how what is kind of like the next frontier in this analytics build out?
Sorry, can you repeat that last part again? I had some noises I couldn't really.
What are the new kind of like the next challenges that we're going to be tackling in terms of analytics, like as vaults get more complex and we introduce more strategies or multi strategies?
Yeah, I mean, I think that what we've been building here is going to be quite comprehensive. As far as like what is next, I think it's just mostly focused on like what's available, what are people wanting, and like migrating a lot of that stuff into the app, and then also just obviously verifying that that data is like quite sound. Yeah, I think it's just going to be really about improving the user experience and like the quality and way we show the data, because we are at a point where we've collected that data, we've started putting it into a form that is usable, and so now like the journey becomes like how do we best convey that data and like make sure people can really understand like as easily as possible what's going on.
I have to agree with Jintao's take in terms of the website, and I think ultimately the way at least I and most people I talk to look at Badger.com is more of like a boutique where the experience is curated. And my kind of my I guess my agenda is to build something that is more personalizable, where the you get to choose what you want to see and how to see it. And what we're laying down here are really the building blocks that enable that. And so if we allow you to set up your own pricer so that you have the source of pricing for every token, you provide that. And obviously we're going to create like a open source standard for how to define what a pricer is and how to fetch, etc. But you're going to provide your own pricer. Then you're going to provide your own vaults, because some vaults are from Charger, some vaults are from Badger, some vaults are experimental, some vaults in beta, etc. And then we're going to ask you whether you want to give a premium or a negatively rank emitting vaults, because some vaults out compound, other vaults send you more stuff. Do you not want to send more stuff? So you're going to give it a negative bias, etc., to sort them. And so what I'm saying is we're building a technology that ultimately gives you more freedom. And so while on one end we're going to have a centerpiece, which is more of a boutique that shows a way of doing that, what we were going to be pursuing underneath is the underlying technology that enables you to build your own website and to self-host it and self-run it, so that you basically don't need the website. Because ultimately, and this is like the thing going on the record, but ultimately my ambition is to kill the website, kill badger.com. There's not going to be any badger.com, because there's going to be many badger.com, because there's going to be your badger.com, and then there's going to be some Badger.coms hosted by community members that just want to host it for free because they want to, because ultimately that's really what it's all about. It's building the tech to enable you to have more freedom, and more freedom also means that you have to make some of the decisions. We can't make them for you. The website shows you our way of making the decisions, and then one day we'll give you the tools to make your own.
We are all Badger.com. All right. Jintao, I know you got to bounce. This has been really helpful. So let's wrap it up here. I hope if you're listening, you now are coming away with a more nuanced understanding of all the different ingredients that go into these APY numbers. And I can't wait to have this live on the site. So you will have the next level in terms of not just knowing what the past APY is, but a better future looking estimate for what it will be. And we will all blast off to this glorious multi-badger.com future. So thanks, guys.
Awesome. Thanks.
Thank you for your time.
Badgercast is a production of Badger DAO. Real quick before you go, please leave us a like or review on your podcast app of choice so that other Badgers can find us. And if you want to learn more or contribute to Badger DAO, the best place to get started is in our Discord server. Just go to www.badger.com and click the Discord link at the bottom. Thanks for listening, and we'll see you next time.